Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and this is a show where our focus will be on the Q2 earnings. And the company on our radar today is Zensar Tech. Now, the company has already posted a net profit of 11.3% uptake to 173.9 crore rupees, and this is versus 156 odd crore rupees that the company had posted in the previous quarter. On the revenue front, just about a 1% uptick is what you've seen in this quarter for Zensar Tech at 1240.8 odd crore rupees. The margins have also remained steady with a slight uptick from 15.3% the previous quarter to 15.7% now. To discuss more insights on the quarterly earnings and the outlook going forward, I'm now joined by Mr. Manish Tandon. He's the CEO and Managing Director of Zensar Technologies. Mr. Tandon, very good morning, and thank you so much for taking the time out for this discussion. Well, first up, Q earnings have largely come on expected lines. The profit is up 11.3% sequentially, even as the revenues from the US markets have somehow seen a negative impact. What has really supported growth for you, and is the US market a bit of a concern?
Yeah, thanks, Sakshi, and welcome to your viewers. Thanks for having me. Great question. I think if you look at the entire business that we have, see, we slice and dice it for investors from a geography perspective, from a vertical perspective, and so on. But I can tell you that except for the high-tech vertical, we are seeing good all-round growth and uptick across our service lines, across our verticals, across our geographies. And since high tech is focused primarily on the US, that's why it's showing an impact on the US revenues much more than other geographies. And as you can see, UK, we had record growth of 11.9 or 12%, somewhere around 12% sequential quarter on quarter. Africa, we had similarly about 9% sequential quarter on quarter growth.
Sure. Mr. Tandon, also wanted to understand on the order book. It is you already have a strong order book. By when do you see the orders pending to get executed and added up onto the top line as well? Any significant wins that you'd like to highlight in terms of orders in Q2? The verticals where you're getting the largest pie of the orders?
So I think first of all, the definition of our order book is a very concrete and clear definition. Unlike what some other people report on TCV, some people report on ACV. Our definition of order book is actual SOWs, statement of works signed, right? And typically in this industry, you get the duration to be, a quarter, half year, maybe a year. So $195 million in orders booked is really pretty good because it's at least 1.3 times higher, 30% higher than what we did last quarter. I think last high number that I remember was something around 170 million. So this is definitely a good performance from an order book perspective. And what I want to emphasize that each of this $194.8 million that you see will accrue to the top line over a period of time. So it is not that we are reporting framework revenues or anything. We are reporting signed statement of works.
Okay. Let's talk a little bit of geographies that you were briefly touching upon. Europe has supported the company's performance definitely in Q2. Do you expect further bump up in demand or in client addition from this region? Vis-a-vis, we already see 70% of your revenues come from the US. Is the larger pie going to still remain US or some kind of market share in terms of geographies going to shift to Europe too?
So if you see, I think broadly our percentage of revenues from the US has declined from 72% to 66% over the last few quarters. See, US market cannot be ignored. It's the largest market in the world. No company in our space can succeed without driving growth in the US market. And we are very, very committed to that. to that market. We need to get our act together better in that market, particularly in the high tech sector, because other parts of that market are doing okay for
Mm.
us. So, Europe and South Africa remain growth engines, and we need to turn around the situation in the high tech vertical.
Okay. So, in terms of the business verticals itself, you did mention a lot about high tech. There's also insurance, manufacturing, BFSI business that you cater to. Going forward from here, how do all of these business verticals look like? Which is the most promising one for you going forward in terms of the revenue contribution?
Both BFSI and MCS remain promising verticals for us. We have launched a whole slew of service offerings, new service offerings, which are geared
Mm-hmm.
towards that.
Mm-hmm.
Second is, we actually, for the first time, we carved out our healthcare business into a new sector called healthcare and life sciences, so that we can
Okay.
focus our service offerings specifically for this sector. So
Mm-hmm.
I'm pretty bullish about all these sectors. As I said, we still have to do a lot of work in the high tech sector.
Okay. While major IT companies have actually delayed the salary hikes, it's Zensar Technologies that has given hikes in the month of July. And despite that, you've been able to see a margin expansion of around 30 basis points. How optimistic are you about holding these margins or maybe improving it also from the current levels?
So our stated goal is to have margins in a narrow mid-teens range. So we want both predictability in the margins and for them to be consistent and in a narrow range, which is mid-teens. And I'm told mid-teens is 14 to 16%.
Mm-hmm.
We're doing better than what we have stated. Um, and we want to see if we can balance the margins with revenue growth. So, growth itself costs money, and as revenue growth will come in, the margins may come to that mid teens level. But
Mm-hmm.
ultimately, and while we talk about revenues and margins and so on, ultimately what the investors care about is the profitability, is the
Correct.
profit that we're generating. And we have delivered in the first 6 months of this year, we have
Mm.
delivered more profit than what we did in the entire financial year last year.
Correct.
So, something that we are very proud of that we could do for our investors.
And the outlook on profitability, what would that be for the entire financial year 2024, if I may ask?
Sakshi, we don't give projections. This is a pretty tough market to give
Sure.
projections on. So we are like that good student giving an exam. We try our best and then let the market and our customers decide what we have scored on the exam.
No, just to understand a little bit, because we were hoping to, we were all anticipating a slowdown or maybe a technical recession to hit in US, parts of Europe as well. Economists are now believing that there could be a very, very soft landing, and one would not feel a major impact of the recession or the slowdown. Keeping that in mind, would you be holding the kind of increment that you've seen on profitability in the first half of the fiscal year in the second half as well?
Yeah, and we have several levers. So as
Yeah.
I said, as a company, we want to maintain margins in the mid-teens. Anything excess, we want to invest it back in our business with our clients for revenue growth, maybe acquisitions, whatever else we can do. And as I said, the objective is really to maximize profit for the investors, not just look at revenues or margins, because you can have a lot of revenue growth, but if profit is not growing, it's no good,
Sure.
and vice versa also.
Sure. Just the last question to you, sir. And that's again, since you were talking a little bit on acquisitions, you already have about a $227 million cash on the books. What are the plans? Are you going to be introducing any buybacks in the way of, or maybe dividends by way of giving to the shareholders? Any acquisitions that you already have on cards, which we can hope to see?
No, at this stage, the board has not taken any decision
Mm-hmm.
on dividends or buybacks or whatever. As soon as the board takes any decision, of course, you will be the first to know. But on acquisitions, we are looking at acquisitions pretty much one company almost every week. Okay, so we are very keen to put this cash to good use for our investors. Also, I think uh, with the with the interest rate environment that we have, the dollar interest rates even on short-term funds today is 5.5%, right?
Mm-hmm.
This having this cash for once, it's not an albatross around your neck. It's actually generating some good profits for our customers and providing us with the safety cushion that we need and enabling us to go after attractive acquisitions as we see them.
Right. Since you mentioned that you're aggressive on your acquisition plans, what can we expect? In which vertical are you looking at the next acquisition, and what could be the potential size of the acquisition?
So we keep a very open mind on the size we and what we want to do, but we want to know what we don't want to do. So uh, we don't want to do acquisitions for geographical expansion, so to say, as yet. We don't want to do an acquisition for service expansion. Say, I don't want to buy a BPO company, for example, right? So we know what not to do, and we go after acquisitions either where there is a turnaround story possible, because our management team is pretty good at effecting turnarounds,
Mm-hmm.
and or it significantly adds to the overall um, profitability and growth of the both the companies, the acquired and Zensar. We also look at how difficult or easy it will be to integrate these companies. So there are lots of factors that we are looking at, but yes, we are very serious about looking at acquisitions. And
Okay.